Buying a home is probably the single biggest financial commitment for most of us. It's also a very emotive decision. For many aspiring homeowners, it is often as much about putting a roof over their heads as it is about sinking their hard-earned cash into a bricks and mortar asset. With me now to discuss this factors that you should consider before purchasing a home is Finweek editor Jana Marais. Good to have you as always. Taking a look at purchasing a home, obviously the big question is how do you know if you can afford one?
Look, I think the guide that banks would look at, they look at about 30% of your gross monthly income as the maximum that they would allow as a kind of a bond repayment. But I do think that's, you know, if I make the sums in my head, that's quite a scary number. You know, you think you actually need a bit more breathing room than that. So what people recommend is that you actually look at your net monthly income after you've spent all your, you've paid all your expenses. And see, I think if you're struggling to pay your rent and not dip into your credit card by the end of the month, maybe that's not the kind of bond repayment you should be looking at, because houses come with a lot more expenses than if you're just a tenant in somebody else's property.
So true, and the interesting mixes and metrics as well that they use from the banking institutions. But what about potential tips on saving on a deposit? It's probably easier for a car versus a house, but doable nonetheless.
I was going to say, it's kind of like saving for anything really. You need to spend less than you earn, and it's much easier said than done often. So you need that discipline to put money away, and I think if you pay yourself first at the beginning of the month and put that money away where you can't touch it, that obviously helps. But some other advice is, that you rent a really small place, as small as possible and as cheap as possible, so you can put some extra cash away. And some people would say, well, move back with your parents. I don't know, that might not work for all of us. And use that, that time to put some serious cash towards a deposit.
Now, it's not only the bond costs, but certainly there are other transactional costs that are incurred here too.
Yes, I think the only people who laugh when there's a house transaction is the lawyers, because they do get a lot of money out of it. So there's things like the transfer fees, which is what you pay to SARS, and it depends on the value of the house, and then things like bond registration fees and bond initiation fees. And you can be sure that even if you think you have the whole list completed, there will probably pop, something else popping up. And I think things that people forget often is, your moving costs, cleaning costs. You move into a house and maybe suddenly you find no curtains that fit or no blinds that fit, and they're guaranteed something will break as well. So make sure that you actually have a little bit of an emergency fund ready for those unexpected emergencies that might also pop up once you move in.
Just to sidestep for a moment, you're quite right, because there are all these other costs that we incur, and we also shouldn't forget insurance here, not only for the homeowner's life and the ability to insure the property as well.
Yes. No, and I think if you're a tenant, you don't even think about it. I've rented for years, and you pay your lease or you pay your rent and you pay water and lights, and if anything breaks, you phone the landlord, and all of a sudden there's all these things like exactly like structural insurance, water. Make sure that if there's a flood or a geyser that bursts, that you're covered, and then of course life insurance. So yes, there's a lot of additional things that if the property is yours, that you will have to look at, that you might not think about.
Goes back to the affordability assessment, like you said,
yes,
which brings us to the big question: rent or buy? I think it's still a significant toss-up right in the market as to which is better.
Yes, and I think it's one of those debates that you'll always find people who's pro-rent and pro-buy. I think the first thing you need to think about before you buy is this a property you really can live in or want to live in for at least the next 5 years? Because there's so many upfront costs involved in buying a property. It's not only the price tag, that the seller agreed to. So you must make sure that, if you're going to move out in a year or two, then probably renting is going to be better. And I think if you're a very financially disciplined person, which I think few of us really are, and you can say, oh, I'll rent, and what I would have spent on a house, I'm going to put that away into savings or invest that. But I think few people do that. So I think it's really, do you want the flexibility of being able to move in 6 months' time, or do you want to pay off an asset that's going to be yours? So it's really a personal choice as well.
So true. And it's a cover that comes out at a poignant time, given the fact that we are approaching a rising interest rate cycle.
Exactly.
So that's
yes,
also another
also something
element
that you need to take into account. But I must say we have nice checklists, and so if you are in the market for a property, I definitely recommend looking at this article, because everything that you need to know and consider is in there. So
there we go, on the cover, your own home, how to make it happen. Go through the checklist, and hopefully the process will be a lot easier on your part.